Right. Good evening, students. Am I audible to you?
Yes.
Right. Okay. So today this session is basically to give kind of a revision to what you have learned, and at the same time to discuss three questions which I think this time the examiner might test. Right. So without wasting time, let's straightforward move on to the questions. So here I will be focusing on three questions, right? One will be from company accounting, preparation of financial statements for limited liability companies. Then accounting for non-profit organizations, which would be a definite question, and integrated and non-integrated accounting, which is coming from the costing part, right? So this is the final examination before the syllabus change. Therefore there will be changes to the syllabus. So make this the opportunity to get through the examination and advance to level 3, right? So having that mindset, let's straightforward go on to the discussion of the question. The PDF of the question paper was shared to the WhatsApp group. Hope you have it with you. So let me start. I think I don't need to introduce myself. I will just quickly tell me. I'm Chandima Prabhath. I am a lecturer for AAT as well as CS Sri Lanka examinations, and I'm a chartered accountant, also a member of AAT, and I graduated from University of Sri Jayawardhanapura from the Department of Accounting, and I have been a prize winner in AAT, CA and CMA. All three examinations I have been prize winner, including the CA final level accounting prize. So having that strong background, I am doing these sessions in order to make sure that your results are uplifted. So having that in my mind, so let's go through the first one. Trial balance of Fab4 Private Limited as at 31st March 2025 is as follows. Stated capital, we have 200,000 ordinary shares. This entire figures are in rupees thousands. Then retained earnings as at 1st April 2024. General reserve we have plant and equipment at cost. Under that we have motor vehicles, machinery, furniture and fittings. Then we have accumulated depreciation as at 1st April 2024. Okay. Now certain figures are given as at 1st April 2024 and the trial balance is at 31st March 2025. So tell me, what is the financial year beginning date? What is the financial year begins or beginning date? When? Financial year begins at 1st April 2024. Financial year begins at 1st April 2024 and at the same time financial year ends at 31st March 2025. So the trial balance is given as at the financial year end date. As at the financial year end date. Okay. Right. So we discussed those things, and here we have inventory balance. You need to make a swift change. This should be inventory as at 31st March 2025. This should be inventory as at 31st March 2025. A slight change is required for the question. Then we have trade receivables, trade payables, cash in hand, and at bank 12% debentures, sales, cost of sales. We have all this. Then we have admin expenses, distribution expenses, debenture interest, other finance expenses, income tax expenses. Okay, so some other information are given. Let's go through them one by one with the answer. So let's see what is the requirement. So you are required to prepare the following statement of profit or loss and other comprehensive income for the use of internal management for the year ended 31st March 2025 and the statement of financial position as at 31st March 2025. So now you know the requirement. You know the requirement. You need to prepare statement of profit or loss and other comprehensive income, and at the same time you need to prepare statement of financial position. Okay. So shall we start drawing the format? Okay, I will give you 5 minutes. Please draw a statement of profit or loss and other comprehensive income, as well as a statement of what? Financial position. Please start drawing. I will also start. I will also start. Okay, first unit statement of profit or loss. First unit statement of profit or loss. Okay, so what is the name of the company? It is Fab4 Private Limited. So I'm starting Fab4 Private Limited. Statement of, you need to write these things, right? At the exam, statement of profit or loss and other comprehensive income. I summarize it as OCI. Then for the year ended, you need to write that. For the year ended 31st March 2025. The figures are in rupees thousands. The figures are in rupees thousands. The figures are in rupees thousands. Okay. So let's start it. Right. Okay, I have two columns with me now. Right. So this one page might not be enough for me. So I'm putting it up for another page. Right. So that is for statement of profit or loss. So under statement of profit or loss, what we have? We are starting from revenue, or else we can say sales. Then from that we need to remove cost of sales. Then we have gross profit. For this gross profit, we have to add what? Other income. We have to add other income if there are any. We need to add it only if there are. Okay. Then after adding other income, we need to start deducting what? Distribution expenses. Distribution expenses. Distribution expenses. Then we have admin expenses. Then we have admin expenses. Then we have other expenses. Other expenses. Then we have finance cost. After deducting all this stuff, we get profit before tax. From the profit before tax, we need to deduct income taxes. Income taxes. Then we get profit for the year. Profit for the year. So we have admin expenses, other expenses, finance expenses, so finance cost. So after deducting all this stuff, we get profit before tax. From the profit before tax, we are deducting income taxes. Then we arrive at profit for the year. But since they are asking for the other comprehensive income also, right, we are moving for another one. So here, for the profit for the year, you need to add other comprehensive income. Other comprehensive income. Can someone tell me what does it mean by profit for the year plus other comprehensive income? For that total, what we say? What's the term that we say for the profit for the year plus other comprehensive income? The total is identified as, you can unmute and speak. I can't see messages, so please unmute and speak. Tell me. What it should be? So it is total comprehensive income. It is total comprehensive income. It is total comprehensive income. Okay. Then after that, we are starting statement of financial position. We are starting statement of financial position. Right. So it is like this. Statement of financial position. You know, for the non-current assets, we need 3 lines. We need 3 lines. Especially for the PPE. What does these 3 columns refer to? So here it is Fab4 Private Limited, statement of financial position, statement of financial position as at 31st March 2025. So the figures are in rupees thousands. So it comprises here cost, accumulated depreciation, and carrying amount. CA means carrying amount. So starting from assets, under assets we have non-current assets, NCA. Under that we have property, plant and equipment. We have property, plant and equipment. So there can be few property, plant and equipment items. Then after leaving few spaces, I have current assets. Current assets. I have current assets. Under current assets, definitely we have inventory. Then we have trade and other receivables. Trade and other receivables. Then other things we need to check. Other things we need to check. So that's about assets. Then if we move on to the liabilities and equity, what happens? The liabilities and equity. Here also I will put 3 columns, then it will be easy for you all. Okay. So equity and liabilities. Equity and liabilities. Equity and liabilities. So here, starting from the stated capital, then if you see the section, we have stated capital and at the same time retained earnings and general reserve. So stated capital, general reserve, and then retained earnings. Retained earnings means retained profits. Then we have non-current liabilities. Then we have non-current liabilities. After that, we have current liabilities. After that, we have current liabilities. Under current liabilities, we have trade and other payables. Starting from trade and other payables. Right. I am done with drawing the two statements. How about you? If you have any friends, you can share the joining link with them. They also can get something, right? It will be an help for them. It will be a help for them. Definitely it will be help. So ask them to join. Okay, are you ready? Shall we start the question? Hadana Gamada, are you ready? Give a raise of hands or a thumbs up or just put yes. Right, good. Okay. So we can start. We can start. First adjustment. Let's go and see the first adjustment. The following additional information is also provided. First one. A flood occurred in the night of 25th March 2025 and inventory costing 750,000 was completely damaged. So when an inventory completely damaged, we can't use it further. So when we can't use it, we are not expecting any economic benefit from that item. So if we have an asset which we are not expecting any economic benefit, right? If we have any asset which we are not expecting an economic benefit, then we can't keep it as an asset further, right? We can't keep it as an asset further. Why? Because we need to remove that asset, right? We need to remove that asset from our financials. Even though it is an asset, when the future economic benefits are not expected, simply even though we have this inventory, those are damaged. We can't sell it and get cash. We can't sell it and get cash. So since we can't sell it and get cash, we can't keep this inventory item further. So what we have to do, we have to remove this inventory from our what? Statement of financial position. And again, I am asking, when the inventories are damaged, is it a profit for us or if it is a loss for us? Tell me. When inventories are damaged, you had certain inventory, now the inventories are damaged. මීයෝ කාලා කියලා හිතන්නකෝ. ඒක ඔයාට ලාභයිද පාඩුයිද? It will be a loss for us. Yes, good. It will be a loss for us. So this entire 750,000 should be a loss for us. Losses are recognized as expenses. But the thing is, now the insurance company finalized the claim on 31st March 2025 and agreed to pay 80% of the cost of inventory as the claim. Okay, so they agree to pay 80% of the cost of the inventories as claim. Now, if we do not have recorded, or else if we do not have an insurance policy, then this entire 750,000 will be an expense, will be a loss. But now, since we have an insurance policy, out of this 750,000, we can claim 80%, or else we can get a claim from the insurance company. So it will not be a loss. So accordingly, out of this 750,000, the net loss will be only 20%. Why? 80% can be recovered from the insurance company. 80% can be recovered from the insurance company. Okay. Then it says no entries were made in the books of accounts to record this occurrence. So if there are no any entries made in the books of account, then it means that the closing inventory reflected in the books includes this 750.
Excuse
So
me,
in
sir.
the
I didn't
yes,
get the first question
what?
properly. The question you're explaining, first one, I didn't get it properly. Can you explain from the first?
This is the first one, Puta.
Yeah,
This is the
you
first idea.
explain. Yeah, that one only. From the beginning.
Okay. So what I was trying to tell is, now there was an inventory item, right? Out of this inventory, 750,000 inventory was damaged. Now, when the inventory is damaged, we can't sell that. So we can't keep that 750,000 worth inventory inside the inventory. We have to remove it. We have to remove it. So that's what I was explaining. Now, when we are removing it, since the inventory were damaged, if we do not have insurance, this entire 750,000 will be a loss for us. But since we have a insurance, out of this 750,000, 80% can be claimed from the insurance company. So the net loss for this entire damage would be only 20% out of the 750,000. Why? Because we can claim 80%. It will not be a loss for us. It will be bared by the insurance company. So no entries were made in the books of accounts means that the mentioned closing inventory balance in the trial balance reflects, or it includes, this 750,000. But now it's no more. So we have to remove that. We have to remove that. So let's see how this adjustment need to be done. Let's see how this adjustment need to be done. Adjustment number 1, inventory. Inventory. So we need to remove this inventory. Since we are going to remove this inventory, out of this, I told you 80% can be claimed for insurance recoverable or insurance claim. So how much is the 80% out of 750,000? How much is the 80% out of 750,000? It is 600. So we can claim 600,000. So the loss 20%. This would be the loss for company. This would be the loss for company. It would be how much? 150,000. It would be 150,000. Now, when we are adjusting this in the financial statements, what we have to do? We have to remove from inventory. So, credit to inventory, how much? 750,000. Then, we can get this 600,000 from the insurance company. Have we received money? No, we do not have, but it is receivable from the insurance company. Therefore, debit to insurance receivable. Debit to insurance receivable 600,000. Then debit to P&L other expenses. Debit to P&L other expenses 150,000. That is our loss. That is our loss. So to adjust this one, this should be the double entry you need to pass. Shall we pass the entry? Let's go and pass the entry. So, first, debit to insurance receivable. Insurance receivable should be under current assets. Insurance receivable should be under current assets. So, I am adding a line item. Insurance receivable 600 in 1000. No? Insurance receivable 600 in thousands. Then, so I debited that one. Then debit to other expenses. Debit to other expenses. So here I have other expenses. I am writing inventory write-off. Inventory write-off. Inventory write-off. How much? 150. 150. Then credit to inventory. Okay. So I have inventory here. How much is the balance reported in the trial balance? The trial balance say we have 2460 worth inventory. We have 2460. From that, I am removing 750. From that, I am removing 750. So it is 1710. 1710. The inventory balance, the correct inventory balance. The correct inventory balance. Okay, done. Next adjustment. Next adjustment. Hope you are doing with me. Next adjustment. On 31st December 2024, the motor vehicle which was purchased on 1st April 2023 at 8.5 million was sold for 6 million. The sales proceed was credited to sales account, and other than that, no entries were recorded in respect of the disposal of motor vehicle. So the disposal proceeds 6 million was included inside the sales. Is it correct? Including that inside sales is correct or not? What do you think? Is it correct? Is it correct? Can we include that motor vehicle sales? Guys, please speak. Is it correct? I hope now you have learned this by now. Okay, no one is going to answer, so I am answering myself. It's wrong. So this is an error. This is an error we need to correct. Then a new motor vehicle was bought on the same day at a cost of 4.5 million, and it has been correctly debited to motor vehicle account. It has been correctly debited to motor vehicle account. Now if you see inside this sales, right? Inside this sales 38,520, we have 6,000 which is wrong. It cannot be inside that. So we need to remove it from that there. Okay. Then again, here motor vehicle. Motor vehicles, we need inside this 13,000, we have 4,500 newly bought motor vehicle, and we have a motor vehicle which is no longer with us inside this, which we need to remove. Which we need to remove. Now, if we quickly recall our memory, right? If we quickly recall our memory, how to dispose of PPE? Disposal of PPE. We need to do few things. We need to do few things. What? We need to remove few items. We need to remove the cost. We need to remove the accumulated depreciation. That means when we remove the cost and accumulated depreciation, we are removing the carrying amount of that asset. Then we need to recognize the sales proceed. We need to recognize the sales proceed. It is cash debit, motor vehicle disposal account credit if you have put in double entries. Then finally, we need to recognize the disposal gain loss. We need to recognize the disposal gain loss in P&L. So if this is a disposal gain, it need to be recognized under other income. If this is a disposal loss, we can recognize it under admin expenses or other expenses, right? So now in this question it clearly says we have disposed a motor vehicle on 31st December 2024. Now if I draw a timeline like this, right? If I draw a timeline like this, our financial year started on 1st April 2024. Then our financial year ends at 31st March 2025, and now we are disposing it in a mid here. Disposing motor vehicle. It is 31st December 2024. That means during this financial year, we have used this motor vehicle for 9 months. We have used this motor vehicle for 9 months, right? We have used this motor vehicle for 9 months during that financial year. And at the same time, here, plus purchasing a new motor vehicle. Purchasing a new motor vehicle. Now, if we purchase a new motor vehicle on 31st December 2024, and if our reporting date is 31st March 2025, in between that period, we have used that new motor vehicle for 3 months. Now, if someone asks from me how we are going to depreciate, I would say, right, this new motor vehicle need to be depreciated for 3 months. Okay. New motor vehicle need to be depreciated for 3 months, and the old motor vehicle need to be depreciated and recognize that depreciation for 9 months. In current financial year, we need to recognize depreciation for 9 months in respect of the disposed motor vehicle, and we have to recognize depreciation for 3 months in respect of the newly purchased motor vehicle. Right. Okay. Then, now when we have purchased this motor vehicle, we have purchased this motor vehicle on, okay, purchased the motor vehicle on 1st April 2023. Okay. Right. Now we have purchased this motor vehicle on 1st April 2023. So, with regard to this disposed motor vehicle, if we have purchased this on 1st April 2023, and if we dispose it in 31st December 2024, total used period is how much? Total used period from 1st April 2023 to 1st April 2024, it is 1 year. And from 1st April 2024 to 31st December 2024, it's 9 months. Therefore, here it is 1 year and 9 months. That means 1.75 years. 1.75 years. So now we have accumulated depreciation at the disposal date relating to 1 year and 9 months. And in the current year P&L, we need to show 9 months depreciation. Why? It was there inside the current financial year for 9 months. Okay, now we need to remove cost and accumulated depreciation. So we can calculate. Here. How much is the cost? So we need to calculate the disposal gain loss. Disposal gain loss. So we need to compare the sales proceed 6 million. I would put it in 6,000, okay, against the carrying amount at disposal date. This comprise cost less accumulated depreciation. The cost of this particular motor vehicle is 8,500. Accumulated depreciation we need to calculate. Now from the date of purchase up to the date of disposal, accumulated depreciation will be there for 1 year and 9 months. 1 year and 9 months. So how to calculate? Accumulated depreciation will be equal to cost 8,500 divided by the useful lifetime. In the third, right? In the third, in the third adjustment or in the third information, it say motor vehicle useful lifetime is 4 years. It says motor vehicle useful lifetime is 4 years. Right. Calculate current accumulated depreciation balance. Right. So divided by 4 years multiplied by 1.75 or 1.75, it is, I can't see your messages. So if you are giving answers, please make sure you are unmute and speak. So here it is 3,718.75. So I will take it as 3,719. 3,719. Any difference? Any different answer? Right. So this is the accumulated depreciation. So 3,719. So I have the carrying amount at the disposal date 8,500 less 3,719, 4,781. 4,781. Right. Okay. Right. So now think, we have sold 4,781 worth motor vehicle for 6,000. Is it a gain or a loss? It's a gain. Abita vasi. So we have a gain of 1,219. So we have a disposal gain. We have a disposal gain of 1,219. 1,219. 1,219. This need to be recognized in P&L. This need to be recognized in P&L. Right? Okay. Then for the current year depreciation purpose, I need to recognize depreciation of this disposed motor vehicle for how many months? 9 months. 9 months. Now we need to calculate the depreciation also. So if you go and see here, it says that, right, according to the given information, the closing cost is 13,000. Okay, 13,000. Right. Now motor vehicle balance, right? Motor vehicle balance is 13,000. Out of this 13,000, 4,500 purchased on here. 4,500 purchased on 31st December 2024. Therefore, this need to be depreciated only for 3 months. So 4,500 divided by 4 into 12 out of 3. 12 out of 3 plus. Then we know මේක ඇතුලේ තියෙනවා ඇත්තටම අයින් වෙලා යන්න ඕන balance එකක් which we have not removed, that is 8,500, right? That is 8,500. මෙන්න මේ 8,500 plus 4,500 තමයි 13,000 කියලා කියන්නේ. And this need to be depreciated for the current year only for 9 months divided by 4 into 12 over 9. ඒක තමයි අතනත් කිව්වේ. So what would be the values? What would be the values? What would be the values? 4,500 divided by 4 into 3 over 12. Here it is 281 plus 281 plus 8,500 divided by 4 into 9 over 12. It is 1,594. So altogether, the total motor vehicle depreciation would be 1,875. 1,875. So this will be, if you want a double entry, this will be debited to motor vehicle depreciation expense, and this will be credited to accumulated motor vehicle depreciation. Okay. Then for the removal of cost, we need to debit this to motor vehicle disposal account. It's a temporary account. I am not going to prepare the the T accounts, but that's how it happens. Debit to motor vehicle disposal account, credit to motor vehicle account. Then for the accumulated depreciation, debit to accumulated depreciation motor vehicles, credit to motor vehicle disposal account. I am giving the double entries as a revising. Then to record the sales proceed, we are debiting cash and crediting motor vehicle disposal account, and to record this disposal gain, it will be debited to motor vehicle disposal account and credited to P&L other income. Credited to P&L other income. Hari. Before I put all this stuff in the financial statements, write this entire thing. මෙන්න මේක ලියාගන්න. Right. Now I am going to put this stuff into the financials. Right. Let's go and see how we are going to do. Okay. Now, so we need to remove from the cost. No, we need to remove from the cost under non-current assets. Right, under non-current assets, as per the trial balance, we have motor vehicles 13,000. Hari. In a motor vehicles. So we had 13,000. From that 13,000, I am removing 8,500. So what will remain would be the cost of 4,500. Then the accumulated depreciation. So opening accumulated depreciation was 2,125 here. As per the trial balance, opening year beginning accumulated depreciation is 2,125. Then what happens? Here? We are depreciating this entire 1,875. Again, 8,500 for 9 months and 4,500 for 3 months. So this 1,875 will be debited to motor vehicle depreciation expense under what? Distribution expenses. Motor vehicle depreciation. 1,875. 1,875 debit to depreciation expense, then go and credit that to here. Credit to 1,875. Credit to where? Credit to motor vehicle accumulated depreciation. Okay, motor vehicle accumulated depreciation. Then from this, I am removing what? I am removing the accumulated depreciation of the disposed motor vehicle 3,719. 3,719. 3,719. So I will get only 281. Now if you see the working, 281 is the remaining 4,500 worth motor vehicles accumulated depreciation. ඒක විතර ඉතුරුනේ. එතකොට ඒකේ accumulated depreciation තමයි වෙයි තියෙන්නේ. So the carrying amount would be costless accumulated depreciation. It is 4,219. It is 4,219. So we removed the cost, we removed the accumulated depreciation. Then we need to record the sales proceed. The sales proceed already recorded inside the revenue. From that we need to remove and take it into the temporary account disposal. Disposal again temporary account ගන්න. So here inside the sales or inside the revenue 38,520 we have 6,000. 6,000. So I am removing that. This is the correction of that error. Error correction. Correction of that error. Error correction. Right. Then what I have to do is to recognize the disposal gain. So motor vehicle disposal gain. Motor vehicle disposal gain under other income. How much? 1,219. 1,219. 1,219. Done. Done. Alright. Second adjustment done. Then we need to depreciate other plant and machinery, right? So machinery 8 years and furniture and fittings 5 years. Okay. So machinery depreciation we can recognize under admin expenses. Machinery depreciation. So how much is the machinery depreciation cost? cost එක කීයද? machine cost එක 6400. අපි ඒ ටික දාගෙන ඉමු ඉස්සෙල්ලාම balance sheet එකට. So here machinery 6400 and furniture and fittings 3000. Furniture and fittings 3000. Okay. Now I am going to depreciate that. I am going to depreciate. කොහොමද? Machine depreciation 6400 need to be entirely depreciated for the year. Useful lifetime is 8 years. So here I am computing that one. Machinery depreciation 6400 divided by 8. 6400 divided by 8. Here then it is 800. Here I am debiting to admin expenses. Here debit to admin expenses, go and credit to accumulated depreciation. Go and credit to accumulated depreciation. How we can get the accumulated depreciation? At the start of the year, machinery accumulated depreciation is 2400. Furniture and fittings accumulated depreciation is 1800. Now, for this 2400, during the year depreciation will be added. Depreciated on. So it is 800. So accumulated depreciation will be total 3200 at the year end. Accordingly, carrying amount will be to 3200. Then furniture and fittings cost 3000. Useful lifetime is 5 years. So we need to depreciate that here into admin expenses. So furniture depreciation 3000 divided by 5, it is 600. It is 600. So debit to admin expenses, credit to the accumulated depreciation. So opening 1800 plus current year 600. Altogether it is 2400. So carrying amount would be 600. Carrying amount would be 600. Now you can get the subtotal. Now you can get the subtotal. Now you can get the subtotal. You can get the subtotal. So here it is 900, 13,900. 5,881. 8,019. And I am going to close this first two. Why the cost and net book value? So the cost and accumulated depreciation will come only for PPE. Will come only for PPE. Right. 3 adjustments done. 3 adjustments done. Fourth adjustment, the following accrued and prepaid expenses are to be accounted as at 31st March 2025. Okay. We have prepaid advertising. We have prepaid advertising. So you can't directly see advertising expense here. You can't directly see advertising expense. Tell me, advertising expenses are classified as distribution expenses or admin expenses? Tell me. Advertising expenses, distribution or admin? It is classified as distribution expenses. So if you go and see here, if you go and see, right, if you go and see here, admin expenses and distribution expenses, totals are given, right? Totals are given. So you can utilize these totals to do the adjustment. So what I'm going to do is Here I'm going to distribution expenses. Here I'm writing distribution expenses. As per the trial balance, I have 2066. Now, the advertising prepaid. So, inside this 2066, right, 8 is not for current year but for next year. So, I have to remove that 8. Why? Prepaid, credit to expense, debit to prepaid expenses, asset ticket. So, credit distribution expenses. This is 8 prepaid. And distribution expenses only remove kara. We are adding that to where? Current assets. So, this is prepaid advertising. Prepaid advertising 8. Prepaid advertising 8. Then audit fees payable. Audit fees are coming under admin expenses. It's payable, not included in the reported one, but we have to record. So expenses are increasing, at the same time payable will also be increased. So here under admin expenses, I am writing admin expenses which is reported in the trial balance. Admin expenses reported in the trial balance is 3,545 plus 70. So debit to admin expenses, credit to payables. Now I am going to current liabilities. Let's go for current liabilities. Here I am writing audit fee payable. I am writing audit fee payable. Audit fee payable 70. Audit fee payable 70. Audit fee payable 70. That's also done. Okay, now we are moving to another important adjustment. Let's see this one. A customer who had a debtor balance of 910,000 as at 31st March 2025 had become insolvent, and the court confirmed the insolvency on 15th April 2025. Now 15th April 2025 means after the reporting period but before the authorization of financial statements. Here, the financial statements were authorized for issue by the board of directors on 31st May 2025. So if you can remember LKS 10, events after the reporting period, so from the reporting date, to date of authorization, is the period that we consider for events after the reporting period. Now within the events after the reporting period, the court has confirmed this bugger is not going to pay. He do not have sufficient money to pay. So he becomes insolvent. Now when he becomes insolvent, we need to write off this as bad debts. Write off as bad debts or debtor impairment. Bad debts, or else we can say debtor impairment. So debit to distribution expenses as bad debts or write off. Debit to distribution expenses 910. Credit to trade receivables. 910. So we are removing 910 from the receivables. Why? We are writing it off. Then directors decided to write off that customer. That's what I mentioned. Then further decided to provide an allowance of 10% on the balance of trade receivables. Now let's see how much is reported in the trial balance. How much is reported? Debtors කියලා බලන්න. Trade receivables කියලා 3910 reported. හරි. එහෙනම් we have reported a trade receivable balance 3910. From this I am writing off 910. Then 3000 worth trade receivables are remaining. 3000 worth trade receivables are remaining. Now what they are telling, for this 3000 worth receivables, 10% allowance is going to be made. So for this 10% means it is 300. It is 300. So this is the closing balance of impairment allowance. This is the closing balance of impairment allowance. Then you need to see first whether we have already recognized an impairment allowance at the beginning of the year. කලින් අවුරුද්දෙන් එන එකක් තියෙනවනේ. So if we have already an impairment allowance balance, we need to record only the difference. මදි ටික විතරයි. හිතන්නකෝ. Assume now at the beginning of the year we have an impairment allowance balance of 200. Now opening balance we have 200, but year ending balance need to be 300. So I need to do what? I need to increase the impairment allowance. Now let's go and see in the trial balance, do we have opening balance? Year beginning balance, do we have? No, we do not have. So that means no opening impairment allowance. So what we have to do is we have to put a provision for entire 300. So here this is also debit to distribution expenses. Debit to distribution expenses 300. Credit to debtor impairment allowance 300. Now if someone asks from you after doing this, what is the net carrying amount of trade receivables? It is equal to 3000 we had after writing off that insolvent debtor. We had 3000. From this we are reducing the allowance 300. So we have 2700, right? We have 2700 as the net carrying amount of trade receivables. This is what we are going to put inside the statement of financial position. Okay, I will give you 2 minutes. Please take this down. Right. Now let's put this into the financial statements. So first, let's put the write-off. Okay. Debit to depreciation expenses. Debtor write-off. Debtor write-off. Debit to depreciation debit to distribution expense 910 and credited to where? Trade receivables. Trade receivables. So under current assets, I can show trade receivables. Here I had 3,910. From that I am removing 910. Then again from this balance, again I have to remove something. What is that? That is the allowance for impairment. So debit to distribution expenses again. Allowance for debtor impairment. Allowance for debtor impairment. Allowance for debtor impairment, it is 300. Allowance for debtor impairment, it is 300. Then here we need to remove that 300 also to get the net carrying amount. So it is 2,700, the net carrying amount of the trade receivables. Net carrying amount of the trade receivables. Right. Then next adjustment. Then the next adjustment. The income tax liability for the year of assessment 24-25, that means for the current year, is estimated to be 3,200. There was no income tax liability for the previous year of assessment. For the last year, there were no income tax. Sometimes this might be the first time, the first year, that they are going to be tax liable. There are certain companies who get tax exemptions, tax holidays and all. So this might be a company like that. The company has paid 3 million as self-assessment income tax payments for the year of assessment 2024-25. That means on quarterly basis we need to do self-assessment payments, right? So my dear students, now let's say if the estimated tax is 3,200, that is our expense. No? Out of that, if we have paid 3,000, how much payable? It is 200. So this is the reported expense. This should be the income tax expense. Out of this 3,200, unpaid portion, unpaid 200 would be a current liability. 3,200 total expense, paid 3,000, then unpaid, that means payable, it is 200. Payable, it is 200. Let's go and put. So here income tax expense. Income taxes. It is 3,200. Income tax expense 3,200. Then under current liabilities, right? Under current liabilities, here I need to put what? Income tax payable. I need to put income tax payable 200. I need to put income tax payable 200. Right. Next adjustment. These are straightforward adjustment. Next adjustment. The company issued 12% debentures on 1st April 2024. Its par value 100 rupees per debenture. Interest is to be paid biannually. That means the cash interest will be paid in 2 installments. That's what they are trying to say. Okay. So 12% debentures. Let's go and see how much is the debenture value. Here 12% debentures. It is 5,000. Okay. So let me explain that. This is adjustment number 7. Debentures. Debentures. So we have a face value or the issued value of 5,000 worth debentures. Now for this we have a 12% interest rate per annum. That means 600 would be the interest expense. අවුරුද්දට මේකනේ interest එක. So this was issued on this was issued on 1st April 2024 and now we are in 31st March 2025. That means this was there for the entire year. This was there for the entire year. So we can recognize an annual interest. So we can recognize an annual interest. So annual interest is 600. Now this need to be recognized in P&L. This is the interest expense. So this need to be recognized in P&L. Now the interest is paid biannually, no? Biannually means for year twice the interest will be paid. Now if you go and see the trial balance, right? Debenture interest paid is given as 300. එහෙනම් මේ 600 දෙකට කඩලා ගෙවනවා කියන එකයි ඔකේ තේරුම. එතකොට 600ෙන් දැන් 300ක් ගෙවලා එතකොට තව ගෙවන්න ඉතුරුයි 300ක්. ඒ කියන්නේ out of the 600 we have paid 300. It is payable again 300. 300 payable. So this 300 payable need to be recognized as a current liability. This 300 payable need to be recognized as a current liability. It need to be recognized as a current liability. Okay? Right. So let's put it. The debentures need to be recognized as a non-current liability. I forgot to tell that. The debenture, 12% debenture, it's a long-term loan. So this need to be recognized under non-current liabilities. This need to be recognized under non-current liabilities. Right. So time is enough. Let's go and put it. Let's go and put it. So under non-current liabilities here, I am putting 12% debentures, 12% debentures worth 5,000, worth 5,000. Then under current liabilities, I need to put debenture interest payable, debenture interest payable 300. Then under P&L, finance cost, right? P&L finance cost, here you need to mention debenture interest. You need to mention debenture interest. It is 600. It is 600. Okay. Right. Then the final adjustment. Let's go and see the final adjustment. The board of directors decided to capitalize the full general reserve at the board meeting held on 20th March 2025. This has not yet accounted. Right. So the board of directors decided to capitalize the full general reserve. Entire general reserve need to be capitalized. So capitalizing means reserve need to be converted into shares. So capitalize to stated capital. Stated capital. That means we are transferring or we are converting the general reserve into ordinary shares. So let's go and see how much was the general reserve. Here, opening general reserve balance was 500. Now what will happen? This 500 will be removed from the general reserve account and it will be added to stated capital. Let's show it in the financial statements. So stated capital now we have 2000 and general reserve we have 500. I am removing this 500 from the general reserve and adding that 500 into stated capital. So general reserve balance would be 0. Stated capital balance would be 2500. 2500. So retained earnings opening balance. Retained earnings opening balance is a loss. Retained earning opening balance is a loss. So I am putting it as a minus figure. Loss minus figure. So it's a loss 360. 360. Okay. 360. Right. Hari. Done. All the adjustments are now completed. Now we need to put any missed items in the trial balance. Stated capital taken, retained earnings taken, general reserve taken, plant and equipment taken, inventory considered, trade receivable considered, trade payables. Trade payables 1873. Cash in hand 500. Okay. So you need to put here cash 500 under current assets. Then debentures considered, sales considered. So sales considered. Now I corrected the misstatement. So here it is 32,520. Then cost of sales 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. 15,646. Okay. Then admin expenses. Admin expenses. So I took it and I did an adjustment. 70 rupees. Audit fee payable adjusted 3,545 plus 70. It is 3,615. Yes. Then distribution expenses 2066 minus 8. 2066 minus 8, it is 2058. 2058. Debenture interest considered. Other finance expenses. Other finance expenses. Other finance expenses 31. Income tax paid considered. Okay, now you can start telling. So the gross profit 32,520 less 15,646. 16,874. Other income 1,219. Distribution 5,143. 5,143. Then admin 5,015. Other expenses 150. Finance 631. Now let's see how much would be the profit before tax. 16,874 plus 1,219 less 1,000, 5,143 less 5,015 less 150 less 631. So I got 7,154 as the profit before tax. From that I am removing 3,200 income taxes. So I have 3,954 as the profit for the year. As the profit for the year. Did anyone get that answer? A answer කාවද කාට හරි? Please raise your hands. Please raise your hands if you got the same answer. Okay, good. Right. So profit for the year we have. Okay. Then other comprehensive income 0. No other comprehensive income. Therefore, the total comprehensive income would be the same value, 3,954. 3,954. Okay. Now, how we are going to add this 3,954? So, this will be a part of the retained earnings. So, we have opening retained earnings minus, it's a loss. But now, current year, we make a profit 3,954. So, by the year end, I have a total accumulated profit 3,594. So, if I get the total equity and liabilities, so let's take the total current liabilities first. 2,443 plus 5,000 plus 3,594 plus 2,500. 13,537. This is total equity and liabilities. This is total equity and liabilities. This is total equity and liabilities. Okay. අපි බලමු assets පැත්තත් මේ විදිහට වෙනවද කියලා. Current assets අරන් බලමු 1,710 plus 2,700 plus 608 plus 500 5,518 plus 8,019 13,537. So the balance sheet or the statement of financial position get tallied. Total assets. Yes. Balance sheet gets tallied. Okay. Done. Tally වුණාද? බලන්න tally වෙච්ච කට්ටිය yes කියලා කියන්නේ. yes කියලා දාන්න chat එකට. Okay, good. Well done. Right. Okay, now let's move on to the accounting for non-profit organizations question. Let's quickly read the question. Let's quickly read the question. For You Sports is a not-for-profit organization formed by a group of young individuals to provide sporting facilities. You are provided the following information for the year ended 31st March 2025. As at 31st March 2025, the association had 200 members and annual membership subscription is 6,000 per member. So the membership subscription income should be the number of members into per annum subscription payment. Out of this 200, 10 joined during the year and paid annual subscription for next 3 years as well. So the new joiners paid for current year, next 3 years. Altogether 4 years. Right. Then assets and liabilities were as follows. Sports equipment, membership subscription received in advance, subscription in arrears. Okay. Accrued expenses, cash balance. Question mark එකක් දාලා දෙන එක අනිවාර්යයෙන්ම හොයන්න වෙනවා. හරි අපි බලමු මෙහෙම. You are required to prepare receipts and payments account for the year ended 31st March 2025. So here receipts and payments account means it's a summarized cash account. So in the cash account you put the daily transactions, but in receipts and payments account we put a summarized for the period. We summarize the same types of cash flows and put as a summary. Okay. So then income and expenditure account, which is almost equal to the profit or loss statement for the year ended 31st March 2025. Hari. එහෙනම් අපි ඒක ගහගමුද receipts and payments account එකයි income and expenditure account එකයි. Right. So මම මේක බෝඩ් එක දෙකට බෙදන්නම් දෙකට බෙදලා අපි හදමු. Right. හරි. බෝඩ් එක දෙකට බෙදුවා. Now we have to prepare. Okay. So first we need receipts and payments account. So here this is the receipts and payments account. It's an asset account. Okay. Then what needed? Then we need the income and expenditure account. The income and expenditure account. It's a financial statement actually. Income and expenditure account. Right. Income and expenditure account. Okay. Fine. අපි තියෙන balances ටික දාගමුද? And as a working, right? As a working, we might require the membership subscription account. Membership subscription account ඒක අපි working එකක් විදිහට ගහගමු. බලන්න මේ financial statements දෙක ගහගන්න මම board එකෙන් මකනකම්. Okay. Now we need membership subscription account. Membership subscription account. Right. Okay. So let me put the opening balance, cash opening balance. කොහෙද තියෙන්නේ? Cash balance එක දීලා තියෙනවා. Opening balance 5,450 in rupees thousands. This is in rupees thousands. Here also in rupees thousands. Right. So opening balance 5,450. 5,450. So here this would be income minus expenses. Income minus expenses. Income minus expenses. Okay. Right. Then let's put the membership subscription details. Membership subscriptions received in advance. Membership subscription. Now you need to first identify what is opening and what is closing. ඊතලයක් දාගන්න opening පැත්තෙන් ඉඳන් closing පැත්තට. opening තියෙන්නේ මගේ පස්සේ closing තියෙන්නේ ඉස්සරහා. එහෙනම් 2025 figures මෙහෙම 2024 figures මෙහෙම තියෙන්නේ. ඒතර හැමතිස්සෙම exam එකේදීත් ඔයා ගාන හදන්න ගන්න කලින් opening to closing ඊතලයක් ගහගන්න නැත්නම් ගාන හදලා දෙක පටලලා දාන්නේ. So make sure that you put this arrow. It will help you thank me later. Okay, so membership subscription received in advance, opening balance 0. Then closing balance is there. Membership subscription received in advance here. When we have received in advance, it is a liability. It's a liability. So here in advance, closing balance, how much? It is brought forward in credit side 90. It is carried down from debit side. So in advance, closing balance. Cash received in advance, closing balance. Then membership subscription in arrears, we have a receivable of 24. It's an asset, so debit side. So arrears, opening balance. Then we have an arrears of, oh sorry, it is not 90, it is 120. It's 120. It's not 90 here, it's 120. I made a mistake. It's 120. It is 120. And then in arrears, subscription received in arrears. So arrears closing balance brought forward in debit side 90, carried down in credit side 90. Arrears closing balance. Okay, right. Then now we know what? We know now the income, subscription income. We can calculate subscription income. How we can calculate? We know the number of members. It is 200. So 200 members into 6,000 per member. 6,000 per member per year. So it is how much? 200 into 6,000. It is 1.2 million. It is 1.2 million. This is the subscription income. So how to record? Debit to membership subscription account, credit to profit or loss or the income and expenditure account. So subscription income. Subscription income, I have calculated it here. This goes to income and expenditure account. 1,200. 1,200. So now you can go and put it directly. Okay, you can go and put it directly here under income. Right, under income, you can write membership subscription. Membership subscription 1,200 in thousands. Okay. Now I can calculate here. If I find out the missing figure here, if I find out the missing figure, this is the membership subscription received. Shall we find out? So if you balance this account, 1,200 plus 1,020 plus 24, it is 1,344. Again, I am removing 90. It is 1,254. This is the receipt of subscription. එහෙනම් මේක තමයි cash account එකට යන්නේ. Or the receipt and payment account. Now you can come here and put here debit to receipts and payments account, credit to membership subscription account, subscriptions received. Subscriptions received 1,254. 1,254. Hari. Okay. Membership subscription done. Now, so let's go with the third additional information. Let's go with the third additional information. Sports equipment which kept for donation purpose worth 450 were donated to set of youngsters in a rural village, and the association purchased 1650 worth sports equipment during the year for donation purpose. Now let's say whether we have inventory. Yeah, here sports equipment kept for donation. Opening balance 300. Opening balance 300. Right? Then we have purchased how much? We have purchased. It clearly say we have purchased 1650. And then we have donated how much? We have donated 450. We have donated 450. So the closing balance of the inventory should be how much? How much? 1500. It's tallying, right? It's agreeing me. It does consider tally anyone. Okay. That means now here donated, the cost of the donated sports equipment shall be recognized as an expense. Why? We held the inventory. This is not for selling purpose, this is for donation purpose. Once we donate it, no longer we are going to get economic benefits, therefore it should be an expense. Right? So this 450 shall be recognized as an expense. ලියන්න මෙහෙම අප්පා අර නැති වුණානේ. Right. Okay. Sorry, we will have to write this again. So let me start it once again. Okay. Right. This is receipts and payments account, income and expenditure. Income and expenditure. Figures are in rupees thousands. Right. So income, we identified one income. What is that? Membership subscription. Membership subscription 1200. And now we are going to identify an expense. What is that? Donation 450. Donation 450. Okay. Donation 450. Here I had opening balance of cash 5450 and subscription received. Subscription received 1254. Subscription received 1254. Okay, done. Then sports equipment costing 500,000 was purchased during the year to use in club's playground. It is PPE. අන්න අපි පාවිච්චි කරන්න අරන් තියෙන්නේ. ඒක PPE වෙනවා මේ. Sports equipment. So we have opening balance of sports equipment 5,000. Then the question say we have purchased during the year. We have purchased during the year 500. Okay. Now tell me, if we purchase during the year 500 altogether by the year end, how much should be the balance? It should be 5,500. We had 5,000. We purchased 500. If so, it need to be 5,500. But now we have only 4,600 remaining. Why is that? Why is that? This is PPE. PPE values get depreciated. PPE values get depreciated. So let's remove depreciation 900. Depreciation 900. Depreciation 900. Depreciation 900. Hurry. Let's record this one. Depreciation 900. Expense. Sports equipment depreciation. Sports equipment depreciation 900. Okay. 3 instructors are employed for the club's activities and are paid 250 per hour at the end of the day. During the year, 3 instructors have spent. Okay. හරි. දැන් මෙතන මේ අපිට receipt and payment account එකකට තව එන්න ඕන දේවල් ටිකක් තියෙනවා මොනවාද? Inventory purchase. Here. Inventory purchase. How much? 450 ද? නෑ. We have purchased inventory කලින් ප්‍රශ්නේදී කිව්වා 1650. එතකොට cash යනවානේ. Then sports equipment purchase. ඒක මට මිස් වුණා. ඒකේ මම මේ දැන් ලියන්නේ. Sports equipment purchase. When we purchase, we have to pay money. So it gives a cash outflow. Hari cash credit වෙනවා. ඒක කලින් මට අමතක වුණා. Right? Now, the 3 instructors have spent 1,200 hours on activities. So salaries for instructor. Salary for instructor. How to compute that? 250 rupees into 1,200. කීයද? පැයකට 250 ගානේ පැය 1200. It is 300,000 divided by 1,000. Since we are preparing this in thousands, the figure would be 300. And we have paid that. Salary 300 we have paid. No any information to tell that we have not paid salary. We have not paid salary. එහෙම කියන්නේ information නැහැ. Okay. Then payments made during the year for electricity were 85 and building rent per month is 10,000 and is to be paid in the same month. Okay. So building rent is 10 and it need to be paid in that month itself. Therefore, rent already paid, no payable. So 10,000 into 12, it is 120. Then electricity. Electricity payments made during the year 85. Okay, but even though the payment made, it will not be the accrual basis value. So let's calculate the electricity expense. Electricity expense. How to get? We have a opening electricity fee payable 10. Opening electricity fee payable 10 we have, right? Now, during the year, right? During the year we have paid 85. From this 85, I told we have opening balance to pay 10. එහෙනම් මේ 85 ගෙවද්දී අපි ඉස්සෙල්ලාම ගෙවන්නේ කලින් අවුරුද්දේ අන්තිම මාසේ බිල. එහෙනම් මේ 85න් කලින් අවුරුද්දේ අන්තිම මාසෙක අයින් කරාම May අවුරුද්දට for this particular year we have paid 75 rupees and for the final month we have to pay 13. ඒතර හරි සරල කතාවක් කියන්නේ සල්ලි වලින් මේ අවුරුද්ද ගෙවුව 85. ඒකෙන් 10 for the prior year මයික අයින් කරා. එතකොට මේ අවුරුද්ද වෙනුවෙන් අපි ගෙවලා තියෙන්නේ for this particular year we have paid only 75 and for this year we have to pay further 13. So altogether it is 88. Electricity expense is 88. Electricity expense is 88. Electricity expense is 88. Right. Done. Okay, that's all. That's all. You can calculate the closing cash balance now. Calculate the closing cash balance and see. So we have a loss of 538. In non-profit organizations, we do not name it as loss. Instead, we say deficit. So deficit for the year is 538. Deficit for the year is 538. Deficit for the year is 538. Okay, done. So we are done with that also, right? So the final thing, final one is quite straightforward. Let me directly go to the final one and finish it off. Okay, here the board of directors of Leoda's company has decided to apply an integrated management accounting system. The following transactions were occurred in the business for the month of March 2025. Stock as at 1st March 2025, we have raw materials, work in progress. Then, so here work in progress means what? The semi-finished goods. Then purchase of raw materials, materials issued for the production, direct wages on the production, production overhead cost, production cost of finished goods, cost of goods sold. So you are required to prepare raw material control account and WIP control account. So let me prepare it, quite straightforward. මම හදන්නම් එතකොට හදන ගමන් රිවයිස් කරගමු. Okay, so you are required to prepare raw material control account and the work in progress control account. Okay. This is RM control account. This shows the movement. Okay, this shows the movement in the raw materials. Then work in progress control account. This shows the movement in the work in progress inventory. Now both these are inventory accounts. That means both these are asset accounts. So if both these are assets account, the debit credit theory which is applicable to a asset is applicable for these two accounts. Okay. Now we have opening balances, raw materials here. Opening balance 500,000. Opening balance 500,000. WIP opening balance 350,000. 350,000. Okay. Now purchase of raw material. When we purchase raw material, what will happen? Raw material stock goes up. And when we purchase it on credit basis, trade payables go up. Okay. So here trade payables 600,000. So debit to raw material control account, credit to trade payables 600,000. Then debit to raw material control account 200,000, credit to cash 200,000. Now out of this opening balance 500,000, purchased 800,000, altogether we have 1.3 million worth raw materials. Out of that, I am issuing 900,000. Now from the raw material warehouse, I am issuing that to the production. When those are issued to the production, it will be converted into work in progress. So remove from here, say in WIP control account. Okay, so I am taking this from raw material to work in progress. How much? 900,000. This is coming from raw material control account. Okay. Then direct wages on production. Direct labor cost. Direct labor cost is a part of the cost of inventory. So it will be form a part of WIP control account. So it is coming from labor control account or salary control account. Labor cost control account. How much? 500,000. Then production overhead cost control account taking in 300,000. So debit to WIP control, credit to production overhead cost control account. Okay. Now, if you see this raw material and the labor cost are direct material and direct labor cost are the prime cost. And then when we add production overhead cost, it is the total production cost. Now, actually this WIP control account reflect as at a particular date how much is the total work in progress balance. Now, once this has been completed, what will happen? We have raw materials are converted into work in progress, then it will be converted into what? Finished goods. Good. So when we are transferring or else when those are completed, the production cost of the finished goods are transferred to another account called what? Finished goods control account, FG control account. FG control account. Now you can balance this off. Now you can balance this off. Here it is 1.3 million. From that I am transferring 900,000. So I will have 400,000 worth inventory remaining. Okay. Under raw materials. Now when it comes to work in progress control account, so I had how much? 2,50,000. හරිනේ 900යි 500 1800 2000 2050. Yes. is 2,050,000. Out of this 2,050,000, 1,350,000 is now already converted into finished goods. So I have a remaining work in progress balance of 700,000. I have a remaining work in progress balance of 700,000. So this is not a big deal. If you get this kind of a question, mark my word, all the marks are with you. This is quite a straightforward question. So what you need to keep in your mind is, if the examiner asks on this raw material control account and other those control accounts, it is for you to give some marks. Okay, so make sure that you get the maximum out of that. Right. So keep in your mind, this is about an asset account. Asset account movements, debits and credits are applied to this one. Right. So with that, today's session comes to an end. I hope something I was able to give to you. So at the examination, make sure that you write the answers well and grab the final exam of your existing syllabus done. Okay, so good luck, dear students. If you have any doubts, you can contact me via note 77-698-1475. If any student is watching this video through YouTube, you also can ask any question if you have. Based on my availability, I will respond to it. Right? So that's how the things goes. Thank you for joining with us. Let's meet with another session in most probably your CA examinations. Thank you. Good night.